so this is the part where just share with you some interesting understanding and perspective, and then not a call to tell you whether to invest, buy or sell, but to show you different angles, and then you go and make your own judgment. Right? So a lot of people are now talking about Bitcoin, whether is it a bubble or is it a next thing, right? So again, everything we share, disclaimer, okay, this is important because if you decide to buy Bitcoin today and tomorrow it crash, you don't come and find me. Okay, so let me share with you a little bit, a short clip I found on YouTube about Bitcoin, right? Let me just on my volume. After these 5 minutes, how many of you are very clear what Bitcoin works? No, right? Okay, that's the point, because it's difficult. Okay, so remember the complicacy of it, because there are points that I'll bring up about it. Okay, so the first thing we want to talk about is to do investing. Okay, you need to make sure that something has a value to it. Okay, so in terms of Bitcoin, what we're going to look at is, of course, I'm talking about cryptocurrency as a general, but we'll focus on the case study of Bitcoin because it's the most commonly traded cryptocurrency. Okay, so in terms of cryptocurrency is whether is this a currency or it's not a currency. Okay, there are few ways that people can actually look to determine or define whether Bitcoin or cryptocurrency is it a form of potential currency, right? So that is where the report shared about. In order to define a currency, there are actually two kinds of things that you need to look out for, right? One is actually the medium of transfer, in terms of exchange, and of course the other one is store of value, right? So what medium of exchange simply means is how liquid it is for one individual or a party to actually exchange for another product. Okay, so the most liquid asset in finance is actually your cash, right? Because it's actually a very good medium of exchange, meaning today I bring cash to any other parties in the same country, you actually can exchange for something. Okay, but in terms of Bitcoin, later on you need to understand if Bitcoin is actually a good medium of exchange. Okay, so that is what it means. Second thing, in terms of store of value, is if you have a dollar right now, right? Everyone knows what that dollar worth in this economy. Okay, so that is the store of value of that dollar, right? In another thing is, let's say gold. Okay, everyone today know if you have a piece of gold right now that weighs a kg. Okay, so what is the value of that? So people can come to consensus and agree what is the value of that piece of thing, right? But as of now, Bitcoin later on, all right, you need to also now see how is Bitcoin value. Okay, so that is what I mean by store of value, which means that do everyone agree on, come to a common consensus and agree that how much this piece of thing worth. Okay, so in terms of medium of exchange, right, if you go and look at Bitcoin, generally it's actually still not a currency per se. Okay, because the medium of exchange is very slow and costly. Just now, that 5 minutes video actually explained also how one person can transfer the Bitcoin or receive the Bitcoin from another person or to another person, right? And you realize that whole process is actually complicated, right? So this is the part where, as of today, Bitcoin is more of an instrument than a currency itself. Okay, so this is the part where we talk about how right now it's not a very effective medium of exchange, because if today, okay, let's say today you hold 1 Bitcoin for free, will you sell it? No, right? Okay. If you hold 1 Bitcoin, or let's say not for free, but you bought a Bitcoin last time at $300, will you sell it today? Some years, okay. If if today you don't hold one, you hold many, will you sell it? 7,000. Sell. So today, majority of here will sell it. Anyone will not sell it, hold it. No, I mean, okay, today if you have a bag of Bitcoins, will you sell it or you hold it? Sell it. How many sell? How many sell? It means sell. Okay, no sell bit. Sell all or hold it? Sell. Release for cash. Okay. Buy? Hold, not buy. That means you already have it. Hold. Hold. Okay. Seems like some don't raise hand. Okay. But basically, if today, imagine you have it, a bag of Bitcoins. Okay. So the idea here is, if you are selling it, okay, most likely you want to cash in for profits, right? But if you look at majority today, how it push price up so high is purely on speculation. That's why I put there speculators, right? Today, a lot of people are holding on to Bitcoin and they are probably not gonna exchange it for a product, which means that last time you can exchange Bitcoin for maybe a product. That means you can literally use Bitcoin as money to buy something, right? Today, I don't believe that majority of people will want to do that anymore, okay? Because of how people are not expecting that Bitcoin can go higher, right? So they will rather want to actually hold on to it, expecting that in the future, they actually can sell it for more, okay? And then the second thing is to transact Bitcoin is actually not widely acceptable. That means today, you cannot go to any store and say that, oh, I want to buy that things and I pay you 1 Bitcoin, for example, right? So it's very difficult to do in terms of that transaction. Okay, so as of today, it's still difficult on this aspect as a currency. Okay, the other one is about store of value, right? So this is where I actually went and dig in a little bit in terms of money, right? As a value and Bitcoin as a value. Okay, so if you look at currency, right, what actually back a currency is your bank and government, your central bank and your government, right? If the government defaults, your currency value literally drops to zero. Okay, so what holds the currency value is your bank and your government. So today, if you want to control currency, okay, basically is the central bank has certain monetary policies to control it. Okay, either they increase interest rate to control, or they print money, or collect back the money to control it. Right, so if you today want to talk about controlling of the value of Bitcoin, right, there's only the control of ceiling, which means that you want to control the maximum price, or I won't say maximum price, but the valuation of Bitcoin. Okay, what you can control is limit the supply. Okay, just like money, if the central bank limit the supply, you can actually control to a certain extent, right? But for Bitcoin, right now today, there's no way of controlling the value of the floor value of Bitcoin. Okay, which means that in currency, as long as your country don't default, your currency is still worth certain amount of money. Okay, unless you talk about hyperinflation, then it worth very little, but it won't go to zero. Okay, but in terms of Bitcoin, right now there is no basis of valuing the bottommost value for Bitcoin. Okay, so that becomes the issue of store value. Okay, so when you combine the store value and the medium exchange, Bitcoin right now is not really like a currency. Okay, so that brings us to the part where how then do we value, or how do we put a value or price into Bitcoin? Right, so in other words, if you're doing investing, how are you going to determine the intrinsic value? Right, so there's this research that talk about the network effect. Right, so what network effect is basically means that your social media, for example, Facebook, is a product of a network effect, which means that as more people join that product, or more people join into the social network, right, the valuation of the network increases. Okay, so that is what we mean by network effect. Alright, so basically all your social media is network effect valuation. Okay, the more people are in that social network, the higher the value is. Right, so that is where big data come into it. Right, but if you talk about Bitcoin, okay, is it really a network effect? It's probably not. Okay, this is a quote over here. If I buy Bitcoin today, right, basically you are believing that in the future the value of Bitcoin will go up. Okay, so this is where the quote talks about how the price of Bitcoin, or the valuation of Bitcoin as of today, is a belief valuation, which means that today you believe that somewhere else in the future, someone else will buy it from you at a higher price, and therefore you gain from it. Okay, so this is actually stating, okay, this whole quote, the italic text, is talking about this theory called the greatest fool theory, which is basically explaining that you are buying something, believing that in the future someone will just buy it from you at a higher price. Okay, so that is what builds up speculation. Okay, which means that the product or any asset doesn't have a value to it, but it's just a belief system that in the future someone will just buy from you higher price. Okay, this is where that research brings to the idea about connecting to understand what this belief system valuation is actually linked to this thing called Pokemon cards, or any actually trading cards, right? Is there an intrinsic value to those cards? Probably don't have. Okay, but how then did these cards become so expensive? Is simply because first there is a limit to it. That means the person who is producing these cards can say that, oh, in this world there's only 5 of this, 5 a kind. Okay, which means that you limit the supply. Then second thing is people starts to make it by giving it like, oh, it's very rare, and therefore it becomes expensive. Okay, so that is basically the belief valuation. okay, which Bitcoin seems to be in this category right now, right? So that brings me to keep on sharing with you guys that it's a bubble, okay? But then the question is, yes, it's potentially, and it has a very strong sign of it building a bubble, but can we still trade the bubble? Yeah, which means can we make money from the bubble? Since it's a bubble, right, might as well make money from it. Okay, so the few things that you need to consider if you want to trade and profit in a bubble, okay, is you need to understand that it's almost impossible to do a valuation of it. That means there's no intrinsic value to it. That's why it's a bubble. Okay, so because of there's no intrinsic value, you first need to understand that there is a very high possibility it can go zero. That's your downside. Okay, but because of it being a bubble, there's no intrinsic value of it. If the demand keeps coming in, there's a possibility of it going infinity. Okay, that is the upside. Okay, so you need to understand that too. Okay, the next thing is the greatest fool theory concept, which is the belief system of valuation. Okay, you need to understand that value now relies solely on believing that someone else will want to buy it from you at a higher price. Okay, which means that if today you own Bitcoin and you want to sell it, you need to literally convince the other person to buy it from you, making sure that he believes that sometime in the future someone else will buy from him at a higher price. And then for him to do that, to sell it off, he needs to then convince another person that Bitcoin will be a higher price in the future and buy from him. Understand that, right? So that is the greater fool theory, right? So the only thing you need to understand right now is you need to understand how or when the market is making buying and selling decision. Okay, so it's purely a sentiment play, which means that there's no valuation, there's no fundamental to it. It's really how people think in the market. Right? Next is a global market, which means that anybody can buy. Right? If this Bitcoin is only sold in Singapore, there's no bubble. Okay, but if it's a global market, then it can eventually become a bubble. So right now, if you follow Bitcoin, CME is introducing futures of it. Okay, so initially it's slightly difficult to trade Bitcoin. Right now you realize that brokers also introduce Bitcoin. Now CME also introduced futures of Bitcoin. Okay, it's actually making easier for almost everyone to trade Bitcoin. Okay, so that becomes a good part about can we trade it now, right? So you need that factor, right? And then this one here is a little bit more macro side, which means that looking at how much money is it there in this economy right now? Okay, because in a tightening economic cycle, that means majority of the central banks are collecting back the money, then you have less money flowing in the economy. Okay, which means that people are actually holding on to their cash tighter. But in an easing environment, that means central bank has already printed a lot of money released into the economy. A lot of people are right now holding on to money, which means that there's a lot of money supply in the economy, which makes investing easier because now the money needs to go somewhere. Okay, so if you look at from this one, you cannot look at short term. You need to look at a longer macro perspective. A lot of central banks has been easing for the past years. Okay, only this year you see some tightening. Okay, tightening means they start collecting back some of the money. Right? There are also banks that are still doing easing, like Japan Euro. They are still doing easing. Okay, so this builds up to a good environment for bubble to build out because a lot of free, easy money can potentially flow into the bubble. Okay, so this creates another aspect of why a bubble might be building. Okay, so this one here, I want to share with you that this is a typical build-up of a bubble asset. Okay, so it will start with, of course, stealth phase, right, which is where your Bitcoin started off in maybe 2004, 2005, that era, right, and then after that, there's start of awareness phase. And if I ask you today, where are we in Bitcoin? There's 4 phases, right? Where are we in Bitcoin? The mania phase, right? But in terms of mania right now, you have your media attention, enthusiasm, greed, and delusion, and new paradigm. Where are we? Sorry? Enthusiasm, greed, and then some say delusion. Media attention. Okay. Actually, later I'll show you some charts. You realize that today we are actually still at media attention. Okay. I feel that we haven't reached the enthusiasm and greed. This one I got the views perspective as well. Okay. Why we feel that maybe greed stage hasn't been reached yet is because not almost everyone is in yet. Okay. Today survey, nobody of you are in. Okay. So if you are greed, I will assume that some of you are already in. Lester. Okay, so I feel that right now we are in the media attention phase, okay, which that one we all cannot deny because you are seeing news being reported about Bitcoin and everything else, crypto, blockchain, all these things, alright? So if we are in the media attention, okay, you can see that the upside to it is still there. The potential, if it's gonna be a bubble, is still there. Okay, so the idea here is how can then we ride on the upside? Okay, initially, we were talking about shorting it. You know this movie called The Big Short? Okay, so basically it's a movie documentary of how the housing bubble builds up. Right? So we were thinking that cryptocurrency can be the next big shot. Then after that, we do some research and then looking at charts, looking at some historical study, it seems like now might not be the new paradigm stage yet. Might still be in the media stage. So instead of the big shot, right, we might still catch the big buy first. Then comes the big shot. Okay, so this is our perspective. Not necessarily it's gonna happen, but sharing with you all these findings that we had over that weekend. Okay, so then of course the question now is, yeah, we are here, right, in the media attention. How can we trade or leverage on this bubble if it's gonna be a bubble, right? So the idea here is there's no fundamental, there's no intrinsic value. The only way to really trade it is really sentiment, which means how the market people are feeling. Second is look at technical. Okay, most of the time when there's no fundamental, traders only can trade using charts. Then therefore your chart becomes super powerful, super accurate. Okay, so later I'll show you some technicals on it. Alright, and of course this part here, the liquidity is very important because this is actually more crucial of a conversation I had in the view back then, last weekend. If you want to short it, okay, liquidity is important because imagine you short, you successfully short, but when it tanks, you cannot get out of the market because nobody can exchange for you to get out of the market. Then you make a lot of money, but you cannot cash out. Okay, so that is a major issue, and that's why we talk about liquidity, right? In all bubbles, liquidity is very crucial because you cannot easily transact with another person, right? So this is the part where you need, if you want to trade, you also need to take note of liquidity, okay? And I then went and studied a little bit about what liquidity means, how to analyze liquidity in market, right? So I actually found out that there is liquidity, right, available in this market can give you hint as to whether the bubble is ready to be popped or not yet. Okay, so this part here, right, I actually will share with you more. It means for liquidity, how to analyze it, you cannot share today, right? It might need another session to share of it, right? But just share with you a quick one. That means a very summarized version of liquidity concept, right? So if there is a tightening of liquidity, which means that people start exiting the market, okay, it can be any asset. That means when people start exiting that particular asset, the liquidity of the asset drops. Okay, so once the liquidity of the asset drops, right, in financial terms, it calls tightening. Okay, so this will lead to future demand being lower because now people are exiting and it becomes difficult to trade it. People will tend to trade it less. Okay, and when people trade it less, demands drop, price tends to drop. Okay, so this is the part where 1, 2, 3. Scenario 1 will happen, it leads to 2, 2 will lead to 3, alright? So when market volatility rise, okay, when people exit the market, price tends to fluctuate significantly. Same for currency, when liquidity drops, your volatility increases, okay? So when market volatility increase, investors now reprice risk, which means that they will now assess that because of volatility, it becomes a riskier asset. And as an investor, if it's a risky asset, you tend to pull your funds out. Right, that leads to lower demand and hence less people willing to sell inside it. Okay, so it's a spiral and then it leads to the whole part of liquidity crunch, which means that everyone wants to exit, nobody buy from them, and therefore the price drop and gets. Okay, so that is the whole idea about liquidity crunch. Okay, so you need to take note of bubble. This might happen, right? So that is the risk on top of your price direction, because this is a major thing that's going to happen. Even if you get your direction right, you might not profit because of this. Okay, so this one we'll talk a little bit more another day about liquidity issue. Okay, so now I show you the technical chart of Bitcoin. Okay, might be a little bit small. I'll just point and highlight to you. Okay, do I have the mouse? Okay, this is likely where it started. I take that for reference from where it started. This is 2017. Okay, that means before 2017, if you look at the chart, it's almost flat. Okay, so 2017, the first rise, okay, is between May to July area. Okay, this rise here, that's another chart. Okay, so maybe I talk about the rise later on. This chart here, what I want to show you, I have a few charts, so later I'll show you all the charts. This one here I want to talk about is, first, if you look at this shape, it's parabolic. Okay, so if it's gonna parabolic, you will expect a deep retracement to be healthy. The retracement needs to correct away the parabolic curve, right? Second thing, what I did measure on this chart here is each of this dip, what is the percentage of the retracement? Okay, so since the start of this move up, the retracement you can see is 1, 2. Now is the third one in this year, right? So the previous two retracement, alright, the numbers a bit small, but I share with you, the previous two retracement average out about 40%. Okay, which means that the peak to the dip, it drops by 40%. Okay, if you understand Fibonacci retracement, which means that this retracement retrace to no. Yeah. After 3 tries, right? Yeah, right. So if it drops 40%, means that your retracement goes to 61.8. Okay, around that region. Right? So this dip 40%, 41 now, right? This dip 40%. So this third dip, you would generally also assume or expect maybe a similar extent of dip, which is about 40%. Okay? And if you pull in your retracement, 40% dip means that the retracement all goes to 618, 50%, 618, 50%, 618. Okay? So that is where technical play comes into it. Okay? If you only look at pure support and resistance, you realize that this dip here and this here, this dip here and potential this future dip here can come into play as well. Okay? There is no fundamental, so the only way to look and analyze is really pure technical. Okay? So that is the first thing that you want to take note. That means that today, as of this dip, it's only 30%. Okay? Which means that based on expectation, 40-40, you expect a 40% dip, this dip as well. Which means that potentially this correction or this drop hasn't complete. Okay? Next, so this builds up to how we can trade this next dip. Okay? So there is trade plan there, doesn't mean it's a trade call. Okay? So this one here, what I did was I also put in a little bit about wave theory, how we analyze it. Okay? So this dip, okay, towards this area, or the target there at 4859, is actually a 61.8%. Okay? Which means that from the top to this bottom, 40% dip. That is the expectation to have for this current correction. Okay, we saw the first wave down. Okay, we expect 1, 2 more. Yeah. So in the short term, that is a potential trade idea, trade plan that we can capture on cryptocurrency. Short term one. Okay, because this short here is very short. That means you wouldn't want to hold on to your short at this very point. Okay, you want to just short it, take profit, exit the market. Okay, this is one way how we can trade it, one potential idea. Longer term perspective, because right now we are in the media phase. Okay, so we are expecting to trade the bubble up, meaning this bubble is building, right? We just ride on it and blow it bigger. Yeah, so this is the one that I show you on smaller scale. Larger scale, we can write this up all the way to 12000. That is $12,000. Each coin is $12,000. It seems now impossible, right? But remember, bubble, it reached a delusional stage. Later, I present you one idea even more delusional. Okay, so this concept, where or what can be the potential push to, what is the sentiment factor that can push this up, is potentially the introduction of CME futures. Okay, right now, still no futures. The demand from futures haven't come in yet. So imagine CME introduced that and open to the market already. The flood of demand comes in, it can potentially push that. Okay, so just watch. Not 100% it's going to do that, but if it happens, this is the small buy, not big buy it. This is the small buy. Okay, if you go and measure, I think I have it also later. I'll show you. From here to there, it's about 100% return only. In terms of dollar now, that means if you buy here at 4,008, reach there actually about 100%, right? No, 200 plus percent, 200 plus. Okay, my math's not very good. Yeah, about that. I remember 100 plus percent. Okay, so this one you can look at it an idea also. Okay, if you ask me how we're going, if this exactly happened like that, how am I going to trade it? The trade plan is there now. It's not a call, it's my own plan. Okay, this is next idea. Okay, now let me show you this concept. This chart is Nasdaq. Okay, if you talk about Nasdaq bubble, what comes to your mind? Nasdaq bubble. Very good. .com. Okay, this is a .com bubble chart. Okay, first look at the pattern of it, parabolic. Okay, and then of course you imagine and recall the chart of how a bubble build up. Okay, this is where your delusional state and your greed state. Okay, if you compare this chart, this is a weekly chart. You compare this chart to this Bitcoin chart, where we are right now here. Okay, very high probability this Bitcoin current state is only in this perspective. Okay, this is the parabolic, the initial parabolic that forms. Okay, what I did was I went and searched what is each of this rally. Okay, so just now we talked about this rally here, right? This to here, here to here, here to here. What is the percentage? Alright. So I did that measurement during the big .com bubble. How much each of this rally is from its retracement to the next peak. What is the percentage of it going higher? Alright. So the first rally here is 79.77%. So average about 80%. Okay. Next one is 77.5. This one is 40. This one is 60. Okay. So what I did was, the average of all this somewhere is about 80% on the high, 80% up. That means it rallied by 80%. The smallest is about 50%. Okay, so the final rally, okay, is about 4 times the previous rally. I took the smaller one. Okay, so from this final rally, and that means this retracement, after that it booms up, right? It's increased by 350%. So I took this first one here, 80%, that is 4 times of it. Can I understand this? Which means that the previous rally, before the final one, which is your greed and delusional stage, the greed and delusional state is 4 times the rally of your previous rally. Okay, so when I take this into account and map it, how Bitcoin potentially can go up during that greed phase, okay, is this. First, Bitcoin rally as of now, average between 160 to 230%. Okay, so just now, we remember .com, 4 times, right? The final rally is 4 times. So today, if we take the low side of Bitcoin, which is 160 times 4, okay, that will be 640% return. That means the final rally, you can see 640% upside. Okay, so if you map it to where the next retracement is going to end, to the very top, imagine this is going to be your final rally. Okay, the calculation came out is each coin costs are worth 35000. Yeah. Delusional, right? If it happens, you'll be millionaire. This is the big buy idea. Okay, so I'm presenting to you potential. It might not happen short, because if you go and look into .com bubble, it doesn't happen in a year. Okay, it builds up. Okay, Bitcoin. Okay, if you really want to look where, because we cannot really see where it started. Okay, but when you say it starts to dip here, right? It's from 1995 to about 2000. 5 years. So if you look at Bitcoin, 2017. So 5 years old. Yeah. Still got not still got hope, still got the opportunity for all of us in this lifetime. That's why liquidity is important. Okay. So at the top again, that comes where liquidity issue comes into play, alright? So that one you need to really take note of it. Okay? That one, your plan, you decide. Nothing to do with me today. I'm just sharing with you what we researched, what we found out, share with you only. Okay? So this is the big buy. Okay? After that, the big short. this is where .com happens. The crash is 83%. Okay, this crash of course is way faster than your rally now. Okay, so this is where Bitcoin can also have the big shot, 80% drop. So if you're gonna drop, apparently this drop won't go zero. So by calculating from the tip, which is 35,000, it drops all the way 80%. The valuation of the coin still at $8,000. Not bad, but probably here the time you cannot sell off already because nobody will want to buy from you. So, so take note of, then this is really the once in a lifetime bubble opportunity that we can all leverage.